Pharma is the top sectoral gainer today. The US President Donald Trump signs the Biosecure Act into a law implying accelerated growth for India's CDMO players.
Relief for BLS International. The Delhi High Court quashes a MEA order that barred the company from participating in tenders of the MEA and Indian missions for 2 years. The stock is up 5%.
Lenskart is higher by 3%. Macquarie initiates an outperform rating on the stock with a target price of 530 rupees per share. Says synergies from an integrated supply chain provides the company an edge over its peers.
Max Healthcare announces entry into Pune via Yerawada buyout. Company to invest 1,000 crores to set up a 450-bed super specialty hospital in the city. The stock still holds with gains of around 2.5%.
ICICI Pru, India's second largest asset management company, makes a strong debut on the street, listing with gains of over 20% from its issue price, still holding with a 19% gain.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and it's good to see the markets trading in the green. Nifty 40 points short of that 20 DMA, which is the next technical level. Hey Mangalam.
Hi Nigel, it is indeed the next technical level for the Nifty Bank as well. A couple of 100 points from here would be the 20-day moving average, a level that it went very close to yesterday but could not conquer. So for both these indices, extremely crucial levels to watch out for. Importantly, the broader markets also. We have 1,900 stocks advancing at the moment as against 800 stocks which are declining. And that's a better looking screen after 3 or 4 days of a big decline in the broader end of the markets. But let's get chatting with the management on our show of Pearl Global. Pallab Banerjee, the Managing Director and Group President of the company, joins in. There are 3 things that we'll discuss with him. Most importantly, the impact of US tariffs, expected synergies from the recent free trade agreements that we've signed, and the company's own capex plans in Bangladesh. Thanks a lot, Pallab, for joining in. Season's greetings to you. We're talking about the US tariffs. There is likely to be some sort of announcement that may come by. What would that entail as per you? That's point number 1. And secondly, we're talking at a time when the rupee is over 90 as against the dollar, despite the strengthening that we've seen recently. What proportion of your currency exposure is unhedged, and how do you benefit from that?
Thank you, first of all, for having me on the show. Yeah. So yes, US, we don't know what's going to happen.
Exactly.
In fact, it's been quite a journey. Like every day we get to hear that something is going to happen. Now, then we don't know. So it's better for a business that we continue to plan, mitigating whatever risk that we have from US. Especially that's only our exposure is to US, which is affected is only India. As you know that we have manufacturing across Bangladesh, Indonesia, Vietnam, and Guatemala, apart from India. So that's growing fine. So that's not impacted with the US, what we have a penalty tariff in India. So yes, first we want to get this 25% of penalty tariff removed from us. So that's the first, I think, is a wish. And apart from that, you're talking about the currency in our favor. That's a tailwind, I would say, but then we can't depend on that. We need to have US as a good market.
Yeah.
As a company, we have been diversifying from US actively for the last few years. So the growth in the other markets have been quite phenomenal for us. So that's helping us. As you can see that US is now almost less than 50%, I would say, the exposure, as we have grown over the years in other markets.
All right. Hi, Pallab. Good morning. Good to see you and Nigel on this side. You'll be hoping that Mr. Trump has maybe a Christmas gift for everyone. And reduces the tariffs from around this 50%. But we live in hope. As you're saying, you've been hearing today, tomorrow, day after. Hopefully, it's in 2025 itself. That said, Pallab, give us some more clarity. You had told us in the past as well, you're looking at shifting some part of the business from India to Bangladesh and Vietnam. Has there been any progress on that front? Is there, has there been some movement? As a percentage, how much does non-India manufacturing now constitute?
So India, for us as a company, India is contributing around 25 to 27% of the top line. So that's the trend that we have been seeing over the years. Yes, we wanted to grow India. We had invested some capital also in the last year. So this year we are expecting a growth, but unfortunately for this US tariff situation, it's more of a stagnant at this point of time. We are developing customers across other geographies for India, so that's in progress. In terms of the customers from US, they have been asking us not to really focus on India for the short term because the tariff disadvantage. Nobody is ready to take that impact of this 25%. So as a result, they have been pressurizing us to either give the 15% discount, which translates to this 25% tariff almost when they land the goods, or to manufacture it out of Bangladesh and Vietnam, where we have our facilities. So that's the kind of discussion. We haven't gone absolute zero in India, I would say, for US market, because always there's a hope that things will be changed quickly. And certain products that are a very strong handwriting in India, a lot of textiles and fabrics are India-based. So that's continued to be in production in India. But yes, whatever we produce in India at this point of time, we have to give that amount of discount so that they don't get that penalty effect as it lands in US. So that's how it's at this point of time. So it's not a sustainable one. So definitely we have been increasing the other markets like Japan, Australia, UK. Of course, like we are looking forward to the FTA discussion with the European Union. So those markets have been growing up in terms of percentage share in India as well.
I just wanted to clarify that. You said 27 to 28% of what you sell is manufactured in India, right?
Yes.
Perfect. You spoke about the other geographies as well. Three major FTAs that have been signed. There is one with UK, there is one with the Eurozone, which we need some clarity on right now. Oman was also signed on December 18th. All of this, what could the quantifiable benefits for these be for you?
So compared to US, UK market is almost about 1/4 or 1/5, you can say. So it's a small market, and we have been already servicing those customers from Bangladesh and Vietnam to certain extents. But you see, the exposure in Bangladesh for this, they had the advantage of the tariff because of LDC status of Bangladesh. So the huge concentration of this UK and Europe is there already in Bangladesh. So now, most of these customers would like to diversify if India comes at par. So that's where, they have started placing business in India with us, with the anticipation that this benefit will be kicking in very soon. So we expect this to happen anytime from now to March, most probably, for UK. And the news is that FTA for European Union will be signed in Jan. So that's a good news. We look forward to it excitingly. So that will be a good move for India.
Right. And if you could quantify your,
My numbers, if you see, the US exposure is approximately just 50%. Below 50, but then Europe and UK would be around 25% approximately for the growth. So a significant growth can happen from India if both these treaties or FTAs will get kicking.
All right. And finally, before we let you go, you have a 110 crore capex plan in Bangladesh and a 20 crore capex plan in India as well. What does all of that mean in terms of asset turns? What's your revenue and margin growth prognosis from here on? So
we do definitely have a goal of better asset turns, anywhere between 3, 4 or above. That would be our wish list. So then in terms of ROC that you've seen, we have been doing it above 20 or around 20. So that will continue to happen. We had plans in Bangladesh, which we have gone ahead with, because that's a country which is quite dedicated for this industry, I would say. So we continue to take that benefit of the strength that Bangladesh has. So the capex that we have planned for in Bangladesh is for a new greenfield as well as a laundry. A lot of our denim is done in Bangladesh as well. And India, we have started investing. We have invested in the populous states of India, like Bihar, and then Orissa and Vizag, and all those other places. We have been growing. So yes, if this US tariff situation improves or it changes, then that will be a big boost for India as well.
Okay, all right, Palab, and I'm sure what's on your Christmas wish list will be a lower tariff. So hopefully the next time we chat will be on the tariffs actually coming down. Wish you a good end of the year and see you in 2026, if not earlier.
Thank you.
Time to slip in a short break. On the other side, continue our focus on markets and on stock-specific action. Stay tuned. Welcome back. Markets holding with a gain of 160 points, and the Nifty Bank is now moving towards the 20-day MA. So both the Nifty and the Nifty Bank on their way to the 20-day MA. We have Somal Mehta of Mirae Asset Sharekhan, who joins us for a technical check. Hi, Somal. Good morning. Good to see you win. It seems the bulls are getting into Christmas week with a fight back on their minds. Where do we go from here? Take some money off the table. If you bought from yesterday's low, you're already getting 200 points or thereabouts. Or do you believe that we're good for more? You rather trail your stop loss now?
Hey, hi, good morning to everyone. Absolutely hold on to the position. Very hopeful that this range will break on the upside. Christmas will be really good from here. Now the crucial levels, as we know, 25,700, 25,600, very crucial levels on the downside, very crucial support zones. My targets would be around 26,200. That'll be the first target, which is a very crucial resistance again, a hurdle. And on the upside, I think in the medium term outlook, 26,700, 800 would be my target in the medium term outlook. But yes, I'm hoping that this entire range of last couple of months will break on the upside, and you should trail the stop loss at 25,700. Bank Nifty very similar as well. This range should break on the upside for a target of 60,500.
Take that point entirely. The market's moving higher, and today it's Reliance which is powering the frontline index ahead. Just the intraday chart of Reliance comes up for you. It's a big up move that we're seeing on that counter. Alongside that, we have Infosys as well. So that explains why the Nifty is in a better position perhaps to reach its 20-day moving average as against the Nifty Bank, which is still a little more distance away than what the Nifty is right now. The Nifty just about 20 points away. So, individual stocks, what do you like?
I have two stocks. One is Fortis. Fortis has been correcting for a little while now, but it's taken support at 200 daily moving average. Again, given a small, a good momentum on the daily charts. Stop loss would be 840 and target would be 950. The second one is L&T. L&T is already on the uptrend and looking great in the medium term outlook. In the short term, a small consolidation breakout. Stop loss would be 4,020 and target would be 4,200.
All right, we take that point. Thank you so much for joining in and giving us your stock calls and calls on the indices. Fairly bullish out there, Somal Mehta. Just before we take that short break or get across to our colleagues at Money Control Pro, pull up the tire stocks. They're seeing a fresh round of buying. Over the last few trading sessions, we've seen Brent crude see a big decline, and it accounts for a fair amount of the raw materials for tires. So Apollo tires up higher. We have JK tires, which is up 6% as well, and pull up something like a CEAT. That too is gripping ahead up at the high point.
Well, and Mangala, when you talk about tire stocks, there's one supplier, Bead Wires, that has exposure to most of them, 40-45%. I think we interviewed the management of Raj Ratan.
Yes.
The stock is off drastically from the top. But if the tire makers are going to do well, then Raj Ratan Buyers could be a stock as well that could see a bit of a turnaround. But I think they have 40-45% of the market share, which is down, I think, from the late 40s. Yep. And the stock is, I think, half of what it was at its peak.
Fair amount of competition is what they're facing in Thailand.
Yes.
Is what the management used to tell us. There is a lot of price wars that are going on out there. So we'll monitor this stock. But as of now, the tire is doing extremely well. Let's get you some ideas for profit from our colleagues at Money Control Pro. Today we have Bharat, who's joining in with the stock. Bharat.
Today's ideas will be Royal Orchid Hotels Limited. Disruptions at Indigo over the past 2 weeks had a minimal impact on the hotel demand. Flight cancellations were offset by extended stays as well as people taking alternate routes to reach their destination. The impact was also restricted as Q3 is a seasonally strong quarter for the hotel companies. The operations at Indigo have fully normalized, which should result into a strong growth year on. We expect Royal Orchid Hotels to deliver a strong Q3 performance. Their property near the Mumbai airport has commenced operations, which should also support strong revenue growth in Q3. The company has outlined aggressive inventory addition plan, aiming to triple its room inventory to 22,000 keys by 2030. The company also has a healthy inventory addition pipeline of about 2,500 keys in the medium term. Importantly, the company is adding more properties on revenue share lease basis, which should accelerate the revenue growth. The company has also highlighted new brand architecture, introducing 5 sub-brands to cater to the distinct needs of the consumers. The hotel industry upcycle over the medium term is positive for players like Royal Orchid Hotels. At the current market price, the stock is trading at an EV by EBITDA of 11 times FY27 projections. The current valuations are attractive, and hence we recommend investors to add this time.
Thanks for that, Bharat. Well, for the time being, we'll slip into a short break. On the other side, we'll focus on the Adani Group that's all set to inaugurate the Navi Mumbai Airport on the 25th of December. We'll get you excerpts of an exclusive interview with Jeet Adani of Adani Airports on the other side.
Let's get to a CNBC-TV18 exclusive now, as the Adani Group is all set to launch the Navi Mumbai Airport on December 25th, Christmas Day. CNBC-TV18 Shireen Bhan spoke with Jeet Adani, who's the director of the Adani Airport Holdings, on the group's possible foray into an airline business. Listen in to what he had to say.
Part of this business are you currently not into that you want to get into? I mean, you know, the big question is a foray into airlines the next big plan on the Adani Group's calendar?
No, absolutely not.
No?
We were legally not allowed
I know,
to.
but I know you're legally at this point in time not allowed.
Yeah.
But the government's been talking about, you know, competition. The government's
Yes.
been talking about the need for a large airlines,
Yeah.
especially in the light of what we've seen happen with Indigo.
Absolutely.
If tomorrow the opportunity were to arise, would
Yeah.
you consider it?
I would say there's nothing that we won't consider. But as it stands today, structurally, the airline industry is not something that we see, fitting our sort of capital discipline. We're used to high margin businesses, investing in asset, and sweating that asset well. The airline is completely opposite in every.
So from a unit economics point of view, it doesn't make any
It
sense
doesn't make
for
sense
you
for us. No.
for you at this
Yeah.
point in time, or even in the future.
Yeah.
If the opportunity were to arise.
Absolutely, yes.
So that's not something that you would consider.
Not at all.
Well, on that note, though, we'll wrap up on this edition of Chartbusters. Probably in 2025, that's the last time that this combination is there on Chartbusters. You stay tuned. The team of Trading Hour comes up next.